A lot of people see T-Mobile as the superior version to Verizon and AT&T. But I think there's a better stock to own if you want to own T-Mobile. The parent company of T-Mobile. This is the Deutsche Telekom. They do the same services in Europe that T-Mobile does in the US. And what is very interesting about this, they own 50% of T-Mobile. And when you look at the market cap, 146 billion, T-Mobile 270 billion. So basically, you get the entire US business and you only pay 10 billion for the rest of Europe. That is very interesting. So let's look into it. Is this maybe a buy? We can already see why the company is so much tied to T-Mobile US, because it makes up a huge chunk of our EBITDA. I don't like to use EBITDA, but they present it here so well. Well, yes, the German segment is big. It is not as big as the US business. But something I like to see is they're growing faster than their competitors. Revenue growth around 3%, that is way better than Verizon and AT&T. And especially when it comes to profitability, let's take EBITDA, once again, don't like it. T-Mobile US, 7.4%. Germany, not as well, 2.5%. Rest of EU, 8.4%. And yes, they have a good chunk of debt, like every other telecom company, but they have been steadily reducing that. Since 2022, they have reduced net debt by 25 billion. Meanwhile, revenue at the company keeps on growing and growing. These growth rates, you don't see them in telecommunication companies normally. They basically doubled revenue since 2014. And I still think they have way more room to grow. They currently make less money than AT&T does, while they're operating outside of America as well. So you can't just say, oh, well, T-Mobile, it disrupted the US market, but now it's gonna slow down. No, it still has growth in the US because it is just a superior service in my opinion, but it also has room to grow in Europe. And this is what I like about this stock. You get the fantastic American business, at the same time you get Europe for basically free. Plus, while revenue has been growing steadily, they have really focused on margins. The operating cash flow has tripled since 2014. While revenue hasn't doubled, operating cash flow has tripled. The company slowly went out of a take market share at all costs to let's increase margins, and this has worked. Now, you can't look at normal capex because that does not include, in this case, the frequencies, etc. that they need to buy. Whenever there's a new auction and they buy it, it peaks and then it goes back down again. Let's take it at around 19 billion of capex, including the intangibles. But it's 20 billion. That gives them around a 7.5 multiple. I don't think that's a lot. AT&T, for example, also makes around 20 billion in free cash flow and also trades for around the same price, even a bit higher. And I'm sorry, but I just don't see AT&T as well of a business as Telecom. T-Mobile keeps on growing and growing. They have net adds every year. Now, of course, Germany, for example, is slower growing than the US right now because Telecom is way more of an established player. They were founded here like 100 years ago or something. So obviously, they're going to be more mature here. But they're still a fantastic business. Plus, you have the rest of Europe, where Telecom is entering the markets. And here you have higher growth rates. Of course, not stellar, but they still have room to grow here. And you get all of this for only 10 billion extra. And you get that with a company which is well capitalized. AT&T had huge issues with its debt because it was enormous. They had to sell off all their bad investments. Meanwhile, Telecom and T-Mobile are fantastic businesses, not too highly levered, reducing the debt while growing. And I really don't see why this company should trade at lower multiples than AT&T. Now, yes, you could say Telekom is a German company, but it doesn't matter. Their main business is in the US. It's not going to be affected by any European nonsense. And the European business is basically free. Now, yes, you didn't have any share buybacks over time, but even that is now changing as they're more maturing and they're starting to buy back some small amount of shares. But meanwhile, free cash flow is exploding. Of course, they can only do so much on margins, but still, this is a fantastic opportunity. So let's look into it. What am I willing to pay for the stock? Currently, if Resium was 20 billion, that's around 4 euros in free cash flow per share. Historically, they have grown revenue between 5 and 6%, but they're also going to have some margin improvement. Historically, they've had great margin improvement, but I'm not sure how much they can keep this up. So I'm going to count with around 6% in revenue growth and 1% in margin improvement for the next 5 years. After that, slow down to just revenue growth and maybe a tiny bit of margin improvement and a 50 multiple. It's a fantastically growing business, not highly leveraged, paying down debt, so I don't really see this trading at like 10 or something. Now, they pay out a small dividend, only 20% payout ratio with a little deduction due to taxes. However, I see them massively increasing this. They're gonna bring down debt a bit more, but after that, I don't really see why they should pay down debt even more. They're borrowing at very low rates, they're probably gonna increase the dividends or start buying back more shares. Now, even with those assumptions, very conservative, 47 euros a share. Currently, they're trading at 30. So that's a fantastic buy actually. Now, what if it goes better? They're gonna start buying back shares. revenue is gonna start growing faster. They had the giant spike during the pandemic, now they're kinda normalizing. Maybe they're gonna go back to growth rates. 9% growth rates for the next 5 years, and 7% after that. And a 17 multiple, because that's a fantastic business. The US business is trading at way higher multiples. I don't see why they shouldn't be. 60 euros a share, even better. But what if it just goes with revenue growth? 5% revenue growth, nothing else. No increase in dividends, no more stock buybacks, no margin improvement. Even then, we make a 10% return. So I think Telecom is a fantastic stock, and I might add to it soon. I might add it to my portfolio. It depends. I have some other buys I want to do first. But if it stays at this level, and I get some cash in, I'm probably going to add to my portfolio. So what do you think? Write it down below. Have a good day.